Perfect. Thank you so much. Hey, everyone. Joshua Martinez here. Before we get started, could you please be so kind to type in a yes into the question section box? Just let me know you can hear my voice and that you can see that you're about to discover on your screen. We are utilizing what's called the GoToWebinar software. So if you're looking for your question section box, you're going to see this little orange box with the arrow in it. Just go ahead and click on that. Down at the bottom, you'll see questions for staff. Click there, and that's how you can respond. Hey, Mike. Hey, Bill. Hey, Don. Thank you so much for the confirmation. Mark, Anthony, Shyam. Appreciate the opportunity. What we're going to be talking about today is a unique way of viewing the market. One of the things that individuals or people in general, when they look at their charts, they pull their charts up, they're doing their very best to identify market direction. Then once they identify market direction, they utilize some sort of entry strategy. Then they protect themselves, ideally with a stop loss, and then maximize profits with a limit. Well, one of the things that we've seen inside the markets is being a trader is very similar to running a business. And if you think about that for a moment, if you are a business owner and you are the owner, you are the CEO, you are the marketer, you are the sales, you are support, you are the accounting, and you're basically doing everything, well, what ends up taking place is because you're only one person, you can only do so much, so therefore the business can only grow so much. And what we discovered inside the markets is that if you're only looking at one time frame to do everything, and in trading, you have to find market direction, entries, stops, limits, and of course, equity management. And if you're doing that all within one time frame, you can get it done. But just like one person doing all the jobs in a company, you do hold the growth back. And so what we're going to be doing today is we're going to be discussing and showing you a unique profit-taking strategy, but we're also going to share with you how to identify overbought and oversold markets, when to enter in, when to exit the markets, but more importantly, basically give you a high-level understanding of what the market is actually doing. And it'll make a little bit more sense when we get into the live market. What I want to do is share with you some testimonials and some track records, real money track records, to kind of reflect what we're doing. What I'm going to be showing you allowed me to generate over 20 months of month-over-month gains. And so before we show you the track records and get into the live charts, in front of you is the risk disclaimer. Just means there is risk involved. You should never invest money that you cannot afford to lose. Always keep risk management in mind. Understand that we're not CTAs, which stands for Commodity Trading Advisors. And what that basically means is that this is research, and what you do with this research is completely up to you. Now, in a few moments, I'm going to share with you an exact way of viewing the markets that helped me personally average over $554.76 per day trading. Now, not every single day is a trading day, but when we do trade, it is proven to be relatively profitable. Now, what's neat about this is a live money track record. In about 51 trading days, we generated $37,723.54, averaging $554.76 a day. Now, of that 51 trading days, we saw 45 of the days be winners, and we had 6 of the days to be losers. And so essentially what we're utilizing is allowing us to win about 8 out of 10 days, almost 9 out of 10 days trading. So before we go any further, I just want to ask the room, type in me, M-E, into the question section box if you would like the experience of winning 8 out of 10 days, or learning how to win 9 out of 10 days trading, or 7 out of 10 days trading. Because in a few moments, that's what we're going to be discussing. Now, we're going to do this on the futures market, and the track record that you see in front of us, that's trading one E-mini contract. But the challenge that we've had this year when sharing and showing this is an E-mini contract can cost about a $500 investment. But this year, the CME, the Chicago Exchange, came out with a new way of trading called micro E-mini contracts. And so what we wanted to do is share with people what they could realistically do with that. Now, let me ask a question, and your participation would be very helpful. Type in a yes, why yes, into the question section box if you're in a position to invest an average of $50 per trade. And what I mean by that is if we jumped into the live market and we said, hey, let's go ahead and buy the market or sell the market, you would be in a position to say, okay, I have $50 to invest. type in yes if that's you. So that's Tyrone, that's Anthony, that's Dave, that's James, that's Brock. Okay, so everything comes down to an investment, return on the investment. So what we did this month is we took a $50 investment, taking advantage of those, the new CME, the new Chicago Exchange micro E-mini contracts, and depending on your broker, so like for example, if you have an trader, you can intraday trade 3 hours a day for about a $50 investment, okay? And what we're able to do thus far is generate $732.37 in return. Now, granted, that's not $7,000 this month. That's not, $70,000 a year. But considering a $50 investment, type it M-E into the question section box if you'd be pretty happy making a little bit over $700 a month, considering a $50 investment average. Because if you invested $100, then that would be about $1,400 in return. And if you invested $150 at a time, now you're getting into over $2,000 a month. And for most people, especially when you're learning how to trade, to be able to invest smaller amounts, to learn a strategy, to learn a technique, to be able to generate some income, you can always scale later, but I think the key is just understanding that process. Now, we've been educating people on how to take advantage of these market opportunities, and I want to show you some testimonials. Some of these testimonials are big money testimonials. Some of them are small money. Just depends on investment, return on the investment. But this student says, in a short 30 minutes on a Sunday open, was able to generate $6,915 US. Takes a snapshot of the trading account to reflect. This student said, did very, very well today, made over $2,185 US in a single day trading. I really like this testimonial because it really speaks volumes in regards to what most people are more than likely going to do. This person says, I've been back testing, forward testing, and paper trading Josh's trading strategies for the past month, and I finally got tired of watching all the winning trades go by. Basically, 3 out of 4 of the trades were winners. Decided to make some real money and was able to generate over $425 within 55 minutes. And so my name is Joshua Martinez, and I'm a 10-plus year trading veteran. I've personally taken a $500 US initial deposit investment, and I've been able to generate over $39,000 US of profit from it. I'm a senior course instructor at NOFT, published author, international speaker, professional analyst, trained tens of thousands of people from all around the world, and I'm a full-time trader myself. I've been featured and published in equities.com, Your Trading Edge, FX Trader Magazine, TraderPlan.com, and even Executive Trader. So what I want to do is share with you some real-world trading opportunities, and what you do with this information, of course, is completely up to you. But let me ask a question. Do me a favor, type in new, N-E-W, if you're brand new to the futures market or you've never traded futures before. Type in futures if you currently trade futures or you know how to trade it. So Vicky's new, Samsy's new, John's new, Joe's new, but Mike currently trades futures, Anthony trades futures, Greg trades futures, TL trades futures. Okay, so there's a healthy mix in the room. One of the things that we're going to look at in a few moments when we get into the live market, we're going to look at the S&P 500. And the reason why we're going to look at the S&P 500, number one, it's considered to be one of the world's most popular symbols, both on the retail side, which are people like you and I, we just trade our own money, and also on the professional side, where people trade other people's money. And so what we're seeing right now is on the S&P, the market's holding at an area of resistance, and it's been holding there for about 4 months. And usually when the market hits this area of resistance, we have a retracement. Now, some people call that a recession, some people call that a correction. Regardless, it's expected to be a retracement. So we're going to share with you and show you a methodology of how to pinpoint this. Now, if this market were to fall, it's about a 2,148 tick downward movement, which would be worth $26,850 US. And so if you know how futures work, you know that S&P 500 is about $12.50 per tick. But if you're brand new to it, let me put this in layman's terms. Depending on your broker, you can intraday trade about 23 hours a day with a $500 investment average. And so what we have here is we have the ability to take potentially a $500 average investment and make over $26,850 US in return. So before we go any further, I like to focus on the end goal in mind, and most people who are looking to trade, that end goal in mind is performance. Type in a ME, M-E, into that question section box if you'd be happy with the life skill of learning how to take a $500 investment average and make over $26,850 US in return from it, even if it took a handful of months to do. So David says me, John says me, Mike says me, Bill says me, Claire says me. So that's the opportunity that we have on hand, and that's what I want to show you inside the live market, because that's what we're going after here at Knopfton Traders Agency, and I think you should be aware of it as well. Now, if you're brand new, let me kind of spend about 3-4 minutes of breaking down and kind of bring you up to speed on what and how to trade futures. If you're an experienced trader, give me 3-4 minutes and then we'll jump right into the live market. Okay, so what we're going to do in a few moments is we're going to look at charts, and charts are relatively straightforward. They measure price movement over time, and they measure it in what's known as Japanese candlesticks, or these little bars. You have all the control over the time frame of the bar, and all you're doing is monitoring price movement over time. And so these bars paint a picture, but the reality of how trading works, especially in the futures market, is you can only buy the market and you can only sell the market. So if we kind of break that down a little bit more, what we're really doing is we're just making bets, and we're going to bet that price is going to go up, or we're going to make a bet that price goes down. And because you can only buy and because you can only sell, you have a 50% chance of being right or wrong if you just guess. What I mean by that is if you just closed your eyes and you just randomly press buy or sell, you have a 50% chance of being right or wrong. So that's your baseline. What I want to share with you is just a way of being able to win more than half your trades. And if you can win more than half your trades with good risk versus reward, you should be able to become what's called a production-driven trader, which is basically means for every 10 trades you place, you're winning more trades than you're losing, so therefore you're going to make more money than you lose. Type in a yes, that logically makes sense. Your baseline is 50-50 if you were to guess. If you basically bet price goes up, it goes up, you make money. If it goes down, you lose money. If you bet price goes down, you make money. If it goes up, you lose money. It's a very straightforward market. Here's an example of what it's like to be a futures trader. And so you're going to have a broker just like any other market. And let's just say hypothetically, when we get into this market, we find a nice low price and we say, hey, we're going to buy. Well, if you're going to buy, depending on your broker may say, you know, to invest in this symbol will be $500 for one E-mini contract. And the futures world is a little bit different because price is not measured in pennies. Price is measured in different increments. So some symbols will measure price movement in increments of 10 cents. So go 10 cents, 20 cents, 30 cents, etc. While other symbols will measure price movement in quarters. So we'll go 25 cents, 50 cents, 75 cents, etc. In this example, we're going to say this symbol that we're going to invest in is going to measure price movement increments of 10 cents. And instead of saying, you know, this 10-cent move or that 10-cent move, we're going to call that a tick, T-I-C-K. So when you hear someone say, hey, move this many ticks, they're referring to the increment of price in which that symbol is measuring, okay? So we're going to say every tick represents 10 cents of price movement, and the value of that tick for you is $10. So if we make a bet that price goes up, and price goes up by one tick, you make $10. If price goes down by one tick, you lose $10. So here's how this works. If we see a symbol in a few moments when we get into the market, and there's a low price, and we go, okay, we're going to buy this market, and the price is $27.90. If we hold on to that trade until the price is $28.90, which is just a $100 move, that's about 1,000 ticks or 1,000 10-cent moves. Now, if every tick is worth $10, in layman's term, what this means is you're able to take a $500 investment and make over $10,000 in return. So before we go any further, I just want to make sure that we're all aware of the opportunities in which the future market has to offer, because if you're aware of it, you can make a decision on whether or not you want to learn it. But if you're not aware of it, then it's a harder decision if you want to learn it. So type in a yes, why yes, into the question section box if it would be important to you to own a life skill that could help you take a $500 investment average and make over $10,000 in return from it, even if it took you 7 to 8 weeks to do. So let's just say 7 to 8 weeks, you made $10,000 with a $500 investment average. We have track records to prove that we've already done this ourselves, and we can share that with you as well. So Mark says that's important. Dave says that's important. Terrence says that's important. This is one of the big reasons why hedge fund traders are trading futures. It's why professional traders are trading futures. You are able to get a relatively large return on the investment, considering the investment size. And because you can only buy and because you can only sell the market, you can make decisions fast. So even stay-at-home moms are trading futures. Trading futures really is providing freedom. People who are trying to make money online. Now, I'm not going to kid you. There are some challenges along the way. If you can make $10,000 trading, you can also lose $10,000 trading. So it's important that you have some sort of methodology. In a few moments, we're going to get into the live market, and I'm going to share with you the methodology that we like to utilize inside what's called the Futures War Room. The Futures War Room is just live trading sessions. We host them 2 times a month. They're 1 hour at a time. And what we do is we go over market direction, entry, stops, and limits. We use trend lines, Fibonacci's, high prices, low prices. It's like a publication. So we send out written descriptions, summary videos, and idea trackers. And we also provide 10 on-demand foundation building lessons. Why did we start the War Room? It's very simple. We know what we're doing, and we find results. When we host a session, live sessions, sometimes we have the ability to make well over $2,000+ at a time. What's neat about that is we have a room of people watching us do this in real time to where they can also do the same thing. And so usually when we make over $2,000+, our audience reports to making, close to that, right? So $1,867. Now, in a few moments, we're going to get to the live market. I'm going to share with you how we do this. You may want to grab a pen and a sheet of paper, okay? And so here's the deal. We're going to use the monthly time frame for direction. We're going to use the daily time frame for high price, low price, and then we're going to use the smaller time frames for entry. So without further ado, let's jump right into the live market, and let's look at something relatively relevant, and let's make sure that everyone's up to speed. Do me a favor, type in a yes into the question section box if you can visually see the S&P 500 E-mini futures chart. This is a monthly time frame, which means every candlestick represents 1 month of trading. Excuse me. Okay, perfect. Now, here's the deal. In trading, there's different time frames. You have up here on the left-hand side, you have monthlies, weekly, dailies, 4 hours, 3 hours, 2 hours. And all that really means is it's capturing that much price movement per candlestick. And so one of the mistakes that new traders make is they try to accomplish many different requirements to put a trade together all within one time frame. And what I mean by that is in trading, there's really a handful of things. So this is what's called a trader's tip. You may want to write it down if you're brand new. But if you're going to be a trader, you have to understand that in trading, there's basically 5 parts to being a trader. You have what's called the direction. So number 1, you have direction. Number 2, you have what's called the entry. Number 3, you have what's called the stop, or an automatic exit for loss. Number 4, you have what's called the limit, or automatic exit for profit. And then number 5, you have what's called equity management. Basically, your staying power, okay? So in a complete trade plan, we need direction, you need entry, you need a stop, you need a limit, and then everything in which you learn is going to help you have these things become better, okay? And so sometimes people will get scanners, sometimes people will get systems, sometimes people will get indicators that they will learn technicals like trend lines, Fibonacci's to help them find direction, or to help them find their entries, to help them find their stops, to help them find their limits. But if you're going to be a trader, these are the 5 things that you have to have for a complete trade plan. So what I want to do is break down the S&P 500 in just a basic naked chart, which just basically means we're starting over. And we're going to use the monthly time frame for the pure goal of just direction. Now, specifically, what we're going to be looking for is U-turns. And to help us accomplish those U-turns, we will use trend lines, okay? We will use Fibonacci's, okay? And then we will also use support and resistance, okay? And I'm going to walk you through the thought process behind everything. So once again, we use the monthly time frame to find U-turns. We're going to find direction, fibs, support, resistance, and the goal is to find direction. Okay, so what we have here inside of this S&P 500 is we have the start of the bullish trend. The bull market started back in March of 2009, and basically the last 10 years and 6 months plus this market's just been going up and up and up. Now the goal here is to find the U-turns. Now all I'm going to do is bring in a strategic hand-drawn trend line, which is basically marks where the market enjoys to form the lows. Do me a favor, type in a yes if you can visually see and you can visually confirm that when the market touches this bottom blue angle, the market goes up. Okay, so that's very important. So number one, in trading, it's all about finding patterns in which the market does over and over and over again. So we know right away, hypothetically speaking, if this market were to fall bearish and come to the uptrend line, more than likely a good idea would be to try to buy the market back up. Type in a yes if this logically makes sense, because that's what the pattern supports. You know, of course, unless the market falls, below the uptrend line. But right now, that's the pattern. And so your goal is to find U-turns. My goal is to find U-turns. And so the question is going to be, is this market going to continue to rally right now, or is the market actually going to retrace? So how do you make that decision? How do you make that call? Well, what we're going to do is zoom in just a little bit. And one of the things that you're going to learn in trading is that the market does the same things around the same price points over and over and over again. And just like how we're able to draw this uptrend to find future low prices, you can pretty much do the same thing on the opposite side to find high prices. And so what we have here is we have this market creating what's called a channel. And this channel just basically lets us know that when the market comes near this blue uptrend line or this resistance level, the market has the ability to fall. Type in a yes if you can visually confirm that when the market touches this top blue level, it has a selling reaction or a downward push. Okay, and so that really makes our trading plan very straightforward, and it works like this. Okay, as long as the market is below the top blue line, okay, as long as we're below the top blue line, think short to the bottom blue line. Essentially, what we're going to be looking for is something like this. We're going to be looking for this market to begin to have a bearish reaction towards the uptrend line. Does this make a little bit of sense? And if it does, that price point or the future low could be price point 2500.00. And if we bring out the calculator, we take the current price point, which is 30.20, minus 2,500. That's $520 worth of a move. But every tick is about 25 cents of movement. So we're going to take 520 and times it by 4 quarters. That's 2,080 ticks. So that is 2,080 ticks. So 2,080 ticks away, which is equal to, now what's neat about this is every tick's worth about $12.50, $26,000. Okay, so what we have here is we have a $26,000 US potential selling opportunity if this market just falls. Now, how much is it going to cost to invest? Well, here's an investment sheet directly from NinjaTrader, which is a charting software which also allows you to trade from there. They have what's called IBs, or introducing brokers, where they can connect broker accounts with you. But the E-mini S&P 500, if you were to trade this 23 hours a day with NinjaTrader, I believe it's like 22 hours and 45 minutes, you can trade a full E-mini contract for $500. And so the question is going to be this. Type in ME into the question section box if you'd be pretty happy taking a $500 average investment and making over $26,000 in return. Because that's what we have here if this market falls from the top blue level, which the market has been reacting bearish since January 2018, so almost 2 solid years of patterns that supports us that the market could fall. Okay. Now here's the question, and here comes the filtering process. Okay. The monthly time frame is designed to give us direction. So when you look at this monthly time frame and we say, are we up or are we down? We have no choice but to recognize the patterns and just basically say, as long as the market stays below the top blue level, the pattern is down. Type in a yes if you agree with that. If you cannot agree with that, then this is not going to work for you. But just type in yes if you agree. As long as the market stays below the top blue level, we have to think or look for the potential of a selling opportunity. Granted, it's not guaranteed, and granted, it's not 100%, but since January 2018, that's what's been happening. Okay, so if that's the case, then what we want to do is we want to begin to minimize risk. We want to make the $26,000, but we want to minimize risk as much as possible. So how do we do that? Well, we do that by bringing in a different time frame. Just like a business, so in a company, you have the CEO, and the CEO is more of the visionary. They cast the vision. They say, this is the type of company I want. This is the type of service that I want to provide, and this is the type of experience I want to give to our clients. That's what the monthly time frame is for us traders. It's the visionary of basically saying, hey, as long as the market stays below the top blue level, expect a sell-off to take place. There's $26,000 of opportunity. And just like a business, the CEO is not going to do everything. So the CEO is going to have a president that's going to execute, right, the vision. That's where we're going to bring in smaller time frames. So we're going to look at the same exact symbol, but we're going to bring in what's called a daily time frame. Okay, so the top chart is the monthly time frame, and the job of the monthly time frame is to give direction. So we're going to write that up here: monthly equals direction. Now, when we look at a daily time frame, the daily time frame is going to give us what's called a high price or low price. Now, I'm going to ask you a very simple question. In the futures market, it's just like placing bets. If you press the sell button, all you're basically doing is making a financial bet that price goes down. If it goes down, you make money. If the price goes up, you lose money. If you make a bet, the price goes up, you press a buy. If it goes up, you make money. If it goes down, you lose money. Now, if this market's going to fall, or in theory, if it falls 2,080 ticks, it's going to fall in a wave pattern. And I just want to ask the room a question. If you're going to sell, do you want to sell when price is very high, or do you want to sell when price is very low? So do me a favor, type in the question section box, type in high price if you like to sell high, or type in low price if you like to sell low. Okay, I just want you to think about this. Mike says, I want to sell high prices. John says high prices. Cheyenne says high prices. James says high price. Gunnar says, I want to sell as high as possible. Right. And so when we look at the daily time frame and we say to ourselves, well, if the direction is down and we have a monthly time frame direction to be down, well, we want to go to the daily time frame and we want to find as high price as possible to sell the market. Because if we sell the market as high as possible, that means we're minimizing risk and we're maximizing reward, because that's how this market works. Now, again, our only focus is to sell this market. Our focus is not to buy the market. Here's what I want to point out to you. When this market comes near the top blue level, type in a yes if you can visually confirm that the market has a bearish reaction. Does everybody see that? Now, what's neat about these bearish reactions, I'm using what's called a measurement tool. This first one, the market fell 1,310 ticks. This one, the market fell over 2,400 ticks. This one, the market fell 800 ticks. This one, the market fell 800 ticks. And this one, the latest one, the market fell 600 ticks. 1, 2, 3, 4, 5. We've already had 5 confirmed reversals at this top blue level. Your job and my job is to find patterns that U-turn the market, and then we take advantage of those patterns until they don't work anymore. Now, if this market were to fall bearish, just like how this top blue level pushed the market down, we're going to do the same exact thing and find where the market forms future low prices. So if you think about this for a moment, when the market falls, notice how this market falls to the bottom blue level. Type in a yes if you can visually confirm that when the market falls, it falls to the bottom blue level. Now, in regards to history repeating itself, does it logically make sense that if this market's going to repeat the same exact pattern that has been around since January of 2018, does it make sense that if this market were to fall bearish, that it would fall to this bottom blue level? And so therefore, we should look to sell the market from where we are now, granted, based upon the proper signal, but sell it from where we are now to that bottom blue level, which is the same exact pattern that's been around since January 2018, and the support's been around since May of 2019. Long story short, what this really means is that we have about a 555 tick selling opportunity before the next bullish push, 555 times that by $12.50, $6,937. So 6,937. 6,937.50. So what do we have in layman's terms? In layman's terms, we have nearly a $7,000 selling opportunity. How long will it take for the market to fall? Last time it took about 14 calendar days, but 10 trading days. So in theory, if the market just does the same thing it did last time, type in a ME, M-E, if you'd be pretty happy, making nearly $7,000 in the next 2 weeks. Joe says me, Mike says me, Vicky says me, Bill says me, Cheyenne says me, Tyrone says me. If you're looking for that question section box, click on that orange button with the arrow on it, and down at the bottom will be the questions. What would you do with an extra $7,000? What if you were able to focus in on this for the rest of the year, and you were able just to make half of this, or an extra $3,500 a month? Okay, so once again, we use the monthly time frame for direction. The monthly time frame says the market should fall bearish as long as we stay below the top level. It should fall bearish a total of 2,080 ticks. The daily time frame we use for high prices. So the daily time frame says we're at a high price, hitting a future resistance, and the market should begin to fall almost 555 ticks. There's only one more thing that we want to do before we start to execute our entry. And the reason why we're doing this filtering process is a very simple thing. We want to minimize risk. When we enter into this market, we want to have the highest percent chance of the market going our way. Now, what's neat about trading the futures market is you can only buy and you can only sell. So if you were to guess, you have a 50% chance of being right or wrong. But if you utilize this methodology, which we're teaching you, then you should be in a position to win more than half your trades. And with a good risk versus reward, you should be able to become what's called a production-driven trader, which basically means you make more money than you lose, okay? Now, let's go ahead and bring up a 1 hour time frame. Now, once again, it's the same exact symbol. It's just we're going to break it down to a different chart. Now, think about this for a moment. 1 hour equals confirm the zone. Now, okay, monthly time frame gives us direction. Direction is down. Daily time frame gives us high price, low price. We're at a high price. 1 hour time frame is going to confirm the zone. Basically, if you're going to sell the market, you want to sell the market in the sell zone. If you're going to buy the market, you want to buy the market in the buy zone. You always want to trade in the direction of who's in control and trade in the direction of momentum. So if we're expecting the sellers to bring the market down, you want to sell the market when the sellers are in control, hence sell zone, okay? Type in a yes if this is making a little bit of sense. Okay, perfect. Now, and once again, I want to highlight on the 1 hour time frame, I want to highlight the support level that we're going after, and then here's the resistance level that we're focusing in on. Excuse me, we got to go a little bit more. This is the resistance level that we're focusing in on. Actually, I want to make it a little bit easier for all of us because it's a better thing right here. Notice when the market touches the top blue level, notice how the market falls. 1, 2, 3, 4. Here we currently are. Right? Does everybody see that? Market touches that top blue level, market falls. Market falls, market falls, market falls, market falls, market falls. If this market just falls from the top blue level to that bottom blue level, you can see clearly, where the market should go, which is this bottom blue level here. Now, before I show you how to enter into the market, the best way to do this is basically to show you the last 2 times the market fell, so that you can see that what we're using works very, very well, okay? So when the market was at this top blue level the first time, all we really want to do is bring in a hand-drawn trend line, okay? And the reason why we bring in a hand-drawn trend line is to do our very, very best to match up where the market U-turns. Now, drawing a hand-drawn trend line, in my opinion, it's all about finding the U-turn areas. So as this market was moving from or on its way up, it's going to make higher highs and higher lows, and it's going to wave bullish. And oftentimes the market finds an area that it's comfortable with, okay? Type in a yes if you can visually see that this blue level is the area where the market U-turns, okay? Does everybody see this? Now, here's the key. If we want to sell the market and we say to ourselves, hey, we touched the top blue level, this is where the market falls, all we really want to do is sell the market when it gets into the sell zone and sell it at what's called a test. Now here, let's see what happens, okay? You see how the market just keeps on holding? Bingo. All right. Does everybody see how the market just broke this uptrend line? So now all we're going to do is we're going to be what's called disciplined traders, and we're going to wait for this market to test the backside of this uptrend line. And I want you to think about this for a moment. The market U-turns at, on, and around the same price points. So if this market has history of going up 1, 2, 3, 4, 5, 6, 7, 8 times at, on, or around this blue level, percentages say that for this market to fall, it's going to want to touch the backside of that trend line. Now you tell me, yes or no, did the market come to the backside of that old angle right here? Did it come to the backside of that old angle right there? Okay, right there. And so what you would want to do is you would want to then sell the market. Did the market fall bearish after coming to the backside of that trend line? Right. Why? Because there's areas in the market and where people from all around the world utilize to identify the U-turns. Now, is it 100%? No. But does it work a lot? Yes. You can see it right in front of you. Okay, so then the market touches the bottom level, and now we're going to say the market's going to go up. Now the market goes all the way up, you know, and it makes higher highs and higher lows, and now the buyers are in control. And then bingo, the market touches the top blue level. Now, what we want to do is we want to do the same exact thing that we just did, which is basically we want to draw an uptrend line. And when we draw this uptrend line, we want to sell the market when the market gets into the sell zone. So all we're going to do is draw this uptrend line, and we're going to find the angle where the market goes up. So you can notice how, we'll make it a little bit cleaner. You can notice how market went up, market goes up, market goes up, market goes up, market goes up. Type in a yes if you can visually confirm that the market U-turns at, on, and around this up blue level. Now, if the market touched resistance, which is the big picture sell-off, we say to ourselves, when the market touches the top blue level, it falls. We just want to sell the market in the sell zone. We're going to wait for the market to break the uptrend line. Okay, so bingo. Market breaks the uptrend line, comes to the backside of the trend line. Right here is where we're going to be looking to sell the market. Now, let's see what ends up taking place. So the market begins to fall, makes lower lows and lower highs. Sellers are in control. And then bingo, goes to the bottom blue level. Now, when this market fell, notice how we were provided the selling opportunity in the sell zone, and if all we had to do was sell the market from the top blue level to the bottom blue level, it was a very fruitful or a very profitable plan. And when the market touches the bottom blue level, look how it goes right back up. Okay? And here we are at the live market. Okay, so before we go any further, this is where when we educate, we kind of like we want to educate people on we want to empower them on what to do based upon what has already happened. Okay, so I'm going to ask you a simple question. Do you want to repeat success, or do you want to make something up? What I mean by that is type into the question section box, repeat, if you want to follow the same exact steps that allowed us to have success, and so therefore we want to repeat the habits and the patterns that help us find success, or do you want to make something up? What do you want to do? Don says, I want to repeat my successes. Mike says, I want to repeat them. Vicky says, I want to repeat them. Marianne says, repeat it. And I know it's a silly question to ask, but those are questions we have to ask ourselves every single day. Like I said, I'm a real trader. I traded these markets every single day. Your emotions that you go through are the same emotions that I go through. I've just been doing this for over 10 plus years, 11 plus years. And these are the disciplines that we create. And if we want to repeat our successes, here's how we're going to repeat these successes based upon the patterns, okay? What we're going to do is we're going to recognize where the market U-turns at. Type in a yes if you agree that the pattern here is the market U-turns at, on, and around this up blue line. Okay? And so if we want to repeat the successes, then what we should do is we should wait for the market to get into the sell zone, let the market come to the backside of the trend line, and then we should start selling the market as the market begins to make lower lows and lower highs, because that's the pattern. That's what's been working all year long, and that's what we should continue to do until the market provides us a new pattern in which then we'll make our decisions on how to move forward. Type in a ME, M-E, if this made sense to you. So we're not going to sell it now. We're going to wait for the market to get into the sell zone. And then for those of you that know candlestick formations or Fibonacci's or counter trend line breaks or have your favorite entry strategy, then you're going to sell that. You're going to use that, or you're going to look for selling opportunities here. So once again, here's the methodology that we like to use. We use the monthly time frame for direction. On the S&P 500, the monthly time frame says we're at a resistance level. It's the same resistance levels that's been U-turning the market since January 2018. If it U-turns, the market should fall 2,080 ticks. We go to the daily time frame to find high prices because we want to minimize risk. Right now, we are at a high price, and we're going to expect the market to fall down to the uptrend line, which has been holding, again, since May of 2019. That will give us nearly a $7,000 selling opportunity. We're waiting for an entry. We go to the 1 hour time frame for the purpose of confirming the zone. So 1 hour equals the zone. And if we get into the sell zone, then we'll start selling the market when the sellers are in control. Okay, now, do you see, or does this logically make sense of how we've been able to obtain the returns that we're obtaining? Type in a yes if you understand now how we're able to average over $554.76 a trading day, how we're winning 88.24% of our trading days, how someone can take a $500 investment and make $37,000 in return from it, or take a $50 investment and make $732 in return from it. All of these are real money live trading account track records. And does it make sense of how our students are reporting making $6,000, making $2,185, making $425 an hour of trading? Because they have the edge on the market and they understand this formula. Okay, so I have about 5 minutes left, and what I need to do is begin to wrap up. But before I go any further, I want to inform you, if you like this style of trading, what we do is we educate people in a very affordable format. We understand that you want to do this. We understand that you want to learn how to do this, but we also understand that you don't want to pay thousands of dollars to learn how to do it. Type in a ME, M-E, into the question section box if you'd like for me to share with you a very, very affordable publication where I can work with you twice a month, mentor you, guide you, and teach you how to do this, give you 10 foundation lessons on how to do this, what I just did, and then also I can send you my picks and my ideas inside the markets, utilizing this formula, in hopes that you can learn this skill on your own, but more importantly, in hopes I can provide you some research that can help you make some money, okay? So again, I have about 5 minutes, but what we did is we put together what's called the Futures War Room. What they are is live trading sessions. They're 2 times a month. We meet the first and the third Wednesday of every month from 11 a.m. to 12 p.m. What I do is, as I explain this in real time, and yes, everything is recorded, we go over market direction, entry, stops, limits, a whole 9 yards. We give you trend lines, Fibonacci's, high price, low price training. We have everything written out like a publication. So we have written descriptions, summary videos, and trade idea trackers. So you have all this information at your fingertips. And then we have 10 on-demand foundation building lessons. So if you've never traded the futures market, we'll teach you about margin. We'll teach you about what questions to ask your broker. We'll teach you how to draw trend lines, Fibonacci, support and resistance. It really is a well-done program. So the program is 12 months, so it's a total of 24 live sessions. We average about $554.76 a trading day. So in theory, if you just duplicated that information, that's about an average of a little bit over $1,000 a month in return, just basically, participating 2 times a month. And so every single time that we meet, we update our written descriptions, we update our trade idea trackers, and then we also update our YouTube videos, which is our recap videos. So the live training sessions, 2 times a month for 12 months, market direction, entry, stops, limits, written descriptions. The total value is $1,843. I'm going to be very straightforward with you. We have an option for you to do this for 20 bucks, okay? But the value here is enormous. And so let's just pretend that for whatever reason you decided to pay $1,800, but again, we have it for $20. Let me just ask you based upon investment return on the investments. So go ahead and put your investment caps on, and let's just say all this program did was teach you how to make an extra $3,000 a month, month over month over month for the rest of your life. Type in a yes into the question section box if that would be worth learning. What if all this program really did was give you a life skill so that you can make some money and just begin to travel and spend more time with your family? Would that be worth the investment? Stop and really think about it. And if all this program really did was just give you the ability to make the money so you could retire in the next 12 months, would that be worth the investments? So here's what we're doing, and I have a few minutes. Because TradeThirsty give us the opportunity to participate in this presentation, we're going to give you the ability to sign up for the program. We have 2 options. You can do the full 12-month option for $197, or you can do a 1-month option for $19.97. You can sign up online at tradersagency.com/war room, but it is a 2-day only opportunity because we're having this session today. Now, these are not subscriptions. What that basically means is you're not going to have month-to-month payments on this or anything. It literally is exactly what we stated. You can have 2 options. You can enroll for $19.97, just try it out for 1 month, or you can do the full 12 months for $197. Type in a M-E, if you want me to send you the link so you can go to tradersagency.com. Maybe a little bit easier, just click on the link. Okay, so that's Joe, that's Tyrone, that's Caroline, that's John. Okay, so here's the link in the question section box. You should have received it. Here's what the page looks like. Okay, so my name is Joshua Martinez. I'm the owner of tradersagency.com. I work with a lot of individuals throughout the industry, and I work with multiple companies as well. And what we do is we do our very best to empower people with the knowledge of being able to identify market opportunities to financially, elevate their life. And so here's all you got to do is step 1, select your offer. You can do the 12-month option, or the most popular one is $19.97. Just make sure you check the box, okay? And then you just have to fill out your information: first name, last name, email address, phone number, billing information. You can get started with Visa, MasterCard, American Express, Discover, place your order, and you're done. I have a video up here that kind of reviews everything you're getting thus far. Everything on the left-hand side is a review of what you're going to receive. Great value, and like I said, it's very affordable. We do this to build trust with a handful of people. We can see James just went ahead and purchased, so congratulations, James, on signing up. Once you sign up, this is what's going to happen. We're going to send you a username and passcode, and you're going to get access to an online education portal. And so you're going to have all your materials available to you right away. And you're not going to have to wait. Literally, you're going to get a welcome email, and then you're going to come join me in the live sessions. Now, all the sessions are recorded, and you do get access to your foundation building lessons right away, so you can go through everything. Okay, so once again, questions. Any questions that you may have? I literally have 1 more minute, and I do apologize. I wish I was more time to have questions, but Richie, the options to sign up is Visa, MasterCard, American Express, or Discover. Suji says, so what happens after the 1997? After the 1997, your access will end. You lose access to everything, and then you can make a decision if you want to do the full 12 months, or because some people look at this and they see the great deal and they go, hey, this is a no-brainer, and they do the 197 for the 12 months. But we also understand that some people, they don't know who I am. You don't know who Traders Agency is, and that's okay. And so some people are only willing to risk $20, and then once they see everything's real, once they see all the training, and once they see all the results, then they do the full access. And we understand that, and it's pretty normal for people to do that too. So Marion says, I have a question. I need a phone number. I'll give you a phone number. Our team is available Monday through Friday. Let me give you a phone number right now. Hold on. I know I'm running out of time. Literally, I'm running out of time. So let me go to a phone number. But our team won't be in. Our team won't be in house until Monday. Dang it! I'm trying to get this phone number for you. Sorry. I have to go pull up this other doc. Hold on one moment. Sorry, this is getting crazy, I know. All right, so we're going to go to desktop companies. Literally just one moment. I'll give you that phone number. My apologies. I should have put it on here too, but I didn't.
Hey, Josh, they can send their questions to help@TradeThirsty.com as well.
Okay,
and
perfect.
You still have a few minutes, but any questions that don't get answered, because there are a lot of questions coming in.
Okay.
This is just to the crowd. You can send emails to help@TradeThirsty.com, and we'll be happy to forward those over to Josh and the team at Traders Agency.
Okay, perfect. I appreciate that. Okay, let's see other questions. I got 1 more minute. And so Tyrone says, can you use any platform? Yes, you can use any platform that you want. Again, this is just education. And so this is to empower you with the formula that we're utilizing. And what does that mean? It just basically means this. Oh, got the phone number. I'm going to send you our phone number now, 407-315-1172, Monday through Friday, 9 a.m. Eastern Time to 5 p.m. Eastern Time. So I send that to the chat so everyone has that phone number. Let me show you that formula one last time, and then we're going to wrap up. And I apologize, everybody. So monthly equals direction. So we determine if we're going to be buying or selling longer term by identifying the U-turns on the monthly time frame. Then let's say in theory, the monthly time frame direction is up. We go to the daily time frame, and then we only start buying when the daily time frame is low, and we continue to buy until the daily time frame is high. And then we use the smaller time frames for entries. In this room, we'll show you different methodologies as well, but we'll use 1 hour time frames for zones, and we'll bring in advanced techniques so that you can also benefit from that as well. Marianne, I sent the phone number in the question section box, so you should see it right above where you're typing right now. SRJ says, how much for the full access? So 197 you get for 12 months. Just 197 right here. Just click the box and you get full access, or try it out for 30 days. And then after 30 days, if you want to do the full thing, then you do the full thing there. I want to say thank you so much for to TradeThirsty. I really appreciate the chance to be on here. Everyone, I really hope you learned a whole lot. Here's the link inside the question section box. You can always send your questions to TradeThirsty, and they'll forward it off to us. We want to say I really, really hope you learned a whole lot. Gave you a new perspective on the market. Remember, Our perspective is no different than running a business. You pretty much do it in your everyday life. We just are adopting what you do that works. Why is there a CEO in a business and a president and executives and team leaders? It's so that you can assign roles and responsibility to individuals so the company can scale and grow faster than what you can do on your own. We take the same approach within the market with different time frames. The monthly time frames for directions, the visionary, daily time frames for high price, low price, lets us maximize profits. 1 hour time frames confirming the zone, and then we will take care of the rest with showing you different entry opportunities with the war room. All right, everyone, have a great day, have a great morning, a great week. You have a fantastic lineup here with other presenters and other speakers. Thank you so much, TradeThirsty, and I'll go ahead and end it.